Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. This is Trading Places Live. It is Tuesday, August 30th, 2022, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we do show futures rebounding a little bit this morning. At the last check, let's see what we've got. We are showing currently NASDAQ futures up 1%, a full percentage point. Dow futures, S&P futures both up right around 0.75%. Dow futures maybe just a little bit, just slightly lower than that. 10-year Treasury yield down 4 basis points back to 307. And crude oil prices currently down nearly $3 a barrel back to $94 a barrel. So giving back some of what was gained yesterday there in oil. Let's walk through today's agenda. I'm going to start off with the daily market recap, then talking technically, SCTR Report, tips and tricks, earnings spotlight, and the 3 you must see. Before we get into that, though, I would like to take you over to earningsbeats.com. If you're new to Earnings Beats, if you're new to listening to my shows, if you go over to earningsbeats.com, you can scroll down. We do have a free newsletter. You can check that out. Name, email address, all it takes. No credit card required. You can unsubscribe at any time. Also, if you go in and click on this register now button for this event, the event was held last Saturday, but if you sign up for it now, it'll take you to a landing page where you can view the recording. We had a great event last Saturday. Where does the market go from here? Of course, I think everybody would like to know the answer to that question. I gave my best ideas as far as where I think it's going and kind of, how we'd wrap up the year, maybe even go into 2023. So if you'd like to check that out, make sure you just go in, click on that register now button. And again, it's just a name and email address, no credit card required. We'll make sure you get a copy of the event. It's time stamped. You can go in and check out individual segments of the show if that's what interests you. Anyhow, it was a great event. Very, very, very well attended. We had thousands of folks that registered for it, and a great deal of them came to the event. So really a great event, a successful event. If you were there, I want to thank you. Really appreciate your support. All right, so let's jump into the daily market recap. I don't know really how to view yesterday's action. I would say it was probably good. It was certainly better than what I was expecting. After the big down day on Friday, I really thought we would get a huge gap down yesterday and maybe continue the selling, maybe even get a little panic selling in the morning and then see what happened in the afternoon. We never really got any of that. I mean, it looked like futures were pretty weak overnight, Sunday night, and then Monday morning when, we got up, futures had kind of, it was a little tamer. It wasn't quite as big a sell-off. We did go down a little bit early in the day, but overall, I mean, the action wasn't that bad considering what we saw on Friday. Anyhow, the Dow Jones Industrial Average was down almost 0.6%. S&P 500 down 0.2%. NASDAQ down 1%. Mid caps down about 0.7%. Small caps down just under 1%. Looking at the sectors, energy and utilities, these were the two groups that were performing well yesterday. Energy gained 1.5%. Crude oil prices were up pretty nicely. Last time I looked, up around $97 a barrel. So that definitely had it helped to lift that group. Utilities also doing really well, trying to hold on to their 20-day moving average support, but they've been in a nice little uptrend here this quarter, which to me was a little surprising. I didn't think utilities would do very well, but some things, I think the market is still trying to figure out and find its way. We had what I think was a pretty significant bottom back in mid-June. We had a nice rally, went back up through moving averages. It looked like, okay, bear market's over. And then now, we had some option-related selling, at least in my opinion, it was option-related. There were a lot of in-the-money calls heading into option expiration week. And then that just accelerated after option expiration week. So I think the market's trying to figure out, okay, is this just a brief pause in the secular bull market rally, that resumption? Is that all this is, just a little bit of a pullback and then we're going to go right back up? Or is it something more significant? Are we going to go back down perhaps test that June low. I know a lot of you out there think this is a secular bear market and we're going to break below the June low. Lots of questions out there. If I had to put my, percentages, probabilities on what I thought was going to happen, first of all, I'll say anything's possible. I always say, you've got to be ready to react to whatever the market gives you. If you just, hunker down, say, okay, this is what is going to happen, and you don't pay attention to the market, you can really get crushed. The market, and I think June was a perfect example. Everybody thought the market was going to keep going down, and it rallies. Recently, last couple of weeks, I've certainly been very bullish, and we've seen a big pullback. So you've got to be willing to at least acknowledge that maybe someone else is right, you're not. And so I'm looking at the possibility that we go lower. I don't believe it'll happen, but moving back below the 20-day moving average with the velocity that we did back on Friday did not put a good spin on this market right now. So I'm much more cautious. I'm still bullish, but I'm much more cautious now that we're trading below the 20-day than I was when we were trading above it. And like I said, I was expecting a pullback with options. I was not expecting the kind of selling that we saw on Friday. I talked about this a little bit yesterday on my show. I won't spend a whole lot of time on it, but I feel like the Fed chair, Jerome Powell, kind of inserted his own, his own thoughts rather than just tell us what the Fed was going to do and what they're seeing. It was like he was editorializing a little bit, which I don't think is appropriate for a Fed chief, just my opinion. But I think he spooked the market on Friday. I think he did the same thing back in 2018 during the trade war. I think that he is kind of projecting himself into this picture, making himself bigger than he needs to be, talking about there's more pain ahead. I don't really think that's appropriate for the Fed. But again, that's just my opinion. I think the Fed should just say what it is. Let the stock market react. Let the stock market figure out whether there's more pain ahead. They do a pretty good job of that. So I think Friday's selling was just as much a part of the stock market losing a little bit of confidence in the Fed as it was about inflation and the fact that the Fed's still talking about inflation and wants to fight inflation. And listen, I'm not saying inflation's not out there. The numbers show that inflation's out there. The part that bothers me is that why isn't gold going up relative to the S&P 500? Why is the dollar breaking out? Those are questions that I've not heard a good answer to. If you believe inflation is a problem, why wouldn't everybody be pouring their resources into gold? That's what happened in the 70s. And why in the heck would you buy our currency? If we got an inflation problem, inflation eats away at the currency. So that's the way I look at the market. I don't listen to what people tell me. I don't even listen to what the Fed, even though the Fed's got some brilliant minds, I don't listen to what they say. Well, to a degree, I guess I do. But I listen much more closely to how the stock market reacts. I want to see what's happening on the charts. Anyways, I look through everything. I just don't understand the whole inflation story because that's not what the charts are telling me. And again, I'd love to know why inflation, if you think inflation's a big problem, I've yet to have one person write in to me. Write in, support@earningsbeats.com. Respond to the video, write in. I try to go back every once in a while and check the comments. I don't always have time to do it, but write in. Why? This is the question. This is the homework assignment. Why is gold not going up relative to the S&P right now? It's been flat to down throughout this entire pandemic. Why? Why is money not rotating? Look back at the 1970s. Gold relative to the S&P 500 absolutely exploded, soared. Not only did gold go up on an absolute basis, it crushed the S&P 500. That's what I would expect with an inflation story. Again, just asking a question. Why isn't gold outperforming in an inflationary environment? The market apparently is scared of inflation. Why isn't it moving into gold? Anyway, I'll leave it at that. On the downside, we had technology, real estate, communication services. These were the three that were struggling. You can see technology right there, moving back down to the 50-day moving average. I'd really like to see it bounce off of this 50-day moving average. Real estate at the 50. We already seen communication services roll over, move below the 50. You can see the short-term bearishness failing to get back through the 20-day. Even technology quickly went back up above and then on Friday lost it. So this is a short-term bearish configuration. So I don't think we're going back down to the low, but I'm also not going to ignore the fact that we've broken back down below the 20-day. And the 50-day would just be one more notch in the bear's belt. So that's what I'm watching right now. 10-year Treasury yield, as I mentioned, down 4 basis points this morning. We've got the June Case-Shiller Home Price Index coming out probably by the time you receive, actually by the time you're listening to this video, should be out. The June FHFA House Price Index also comes out same time. And then we'll get consumer confidence out at 10 a.m. this morning. So those are the 3 economic reports. Not a whole lot of earnings reports. I'll go over a couple of those just a bit. So let's move on to talking technically. Here's the S&P 500. This was that big Friday breakdown I was talking about. That candle, I've got no bullish words for it. That is an ugly candle. I don't like candles that open at the high and close at the low on increasing volume, just selling all day long. That's a trend day to the downside. We started off above the 20. We ended up below the 20. I have no, like I said, no bullish words. I talk bullishly when I see bullish stuff. I talk bearishly when I see bearish stuff. That was bearish. Whether it continues, I don't know. We're still above the 20-day. This breakout right here where we crossed above 4,000. I think 4,000 is pretty good support. You got the 50-day moving average sitting at 4,003. I think there's still reason for hope if you're bullish, and I am. So, that's what I'm looking at this point. Now, am I wildly jumping into leveraged ETFs on the long side here? Absolutely not. For me, technical analysis is about managing risk. I don't just call a bottom and just let it go and don't look at anything anymore. I continue to monitor it. I would have absolutely remained in everything I owned if we held the 20-day and kept going higher. This break right here below the 20 was a little bit of a warning sign. And then when we came right back up above it, I thought, okay, here we go. We're ready to roll again. We're going back to highs. And then Friday happened. And, it was a bad call. I thought we were going up. We went down. We broke down. And so now I think you have to look at the market in a little bit different light. I'm still more intermediate to longer term bullish, but short term, this is ugly. We've got to reverse this. So we'll see. Futures are up, by the way. So we'll see whether or not, NASDAQ's up 1%. I think the S&P was up 0.75% when I looked. So we got a little bit of work to do. We got to get back through that 20-day number one. That's 100 points above where we finished on Monday. So we'll see. We'll see how we do. On the 60-minute chart, one thing I'm going to be looking for is, can we get back through the 20-hour EMA? I mean, we did that here, but on the way down, you see the lower prices and you see the PPO start to turn back up. That's a positive divergence. That usually results in a 50-day test and or a PPO centerline test. There it is. Perfectly. And then from there, what I say is the market's free to do whatever it wants. I mean, that resolves the hourly positive divergence. We went back to the center line, went back to the zero line. At that point, the PPO zero line means no momentum. That's what it means to me. When you are at the zero line, no one's got an advantage. Your 12-period moving average and your 26-period moving average are identical. That's what the PPO represents, the difference between those two moving averages. So if your short-term moving average and your long-term moving average are identical, who's got the momentum? I don't see anyone. So that's when I get a positive divergence like this, that's what I look for. I look to get back to the center line, look to get back to the 50-day and or, one or both of those. And then from there, the market dictates where it goes. Well, we went down as we went down. The PPO goes down with it. Now we're potentially moving back up. And my question is, can we get through the 20-day? If I didn't look at any other chart, I would say I'd be expecting failure. Now, because I do look at other charts, and I did see what I thought was a bottom back in mid-June, and I am a little bit more bullish, I wouldn't be surprised if we go through the 20, but I'm not going to bet on it. I want to see it. That's the difference. I'm not going to bet on the market on the long side and then hope that we break above. That's not my style. It's not my strategy. I like to see us get through it. So that's the first test, is the 20-hour, which is right now sitting at 4,087. That's 57 points above where we closed, which is about 1.4%. And like I said, S&P futures up about 0.75%. So we need to do double what the futures are doing just to get back up here and test this area. So we got some work to do. That's my point here. All right, let's move on to the scooter report. Really, all I want to do is just point out that when you go into StockCharts on your dashboard, go over here under Member Tools and scroll down until you get to Summary Pages. The last line here on Summary Pages is Scooter Reports. And without getting into a whole lot, you can go over to the Chart School and type in Scooter or StockCharts Technical Rank, and it'll bring up an article, Chart School article, that'll help you as far as figuring out what the scooter is. But in a nutshell, the scooter is looking back over the last 5 months, 5 to 6 months, and it's looking and comparing stocks within their own asset class. So large caps versus large caps, mid caps versus mid caps, that sort of thing. And then it's applying a formula. And you could go back and look at the formula, but it literally takes the formula and then it ranks the stocks within each asset class from 0 to 100, with 100 being the strongest and 0 being the weakest. So if you just want to take, and this was developed by John Murphy, who I have tremendous respect for. I've learned so much from John over the years, and I often credit him for a lot of the research work that I now do. I really got inspired by a lot of his work, his books. Anyway, John developed the scooter reports, so that adds a certain level of credibility in my mind right there. But it's just quick and dirty. It has limitations. The biggest limitation for me is that if you're looking at stocks that have been the strongest over the last year, the scooter is not the right tool, because scooter, if you look at the calculation and the way it's developed, it doesn't really look back past about 5 months, maybe 5.5, 6 months. That's it. So if you want to know what's happened to a stock since the pandemic started, the scooter's not going to give you that. It's going to give you 2022, basically, most of it. So if you click on this, though, you can do a few things here. Number one, here's large cap stocks, scooters. It's the default is it's giving you the highest scooter scores. And if you notice, many of them are in energy and materials. Got top 4 in energy. Then you've got 2 in technology, but Enphase Energy is in renewable energy. Then you've got specialty chemical stocks coming in, more energy stocks, more energy. Clearly, energy stocks have been leaders this year. I don't think too many folks are going to deny that. That's what's working. So if you click on this column, it'll then give you what's not working. Technology, 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 consumer discretionary, technology, communication services. We've been in a cyclical bear market most of this year. Technology, consumer discretionary did not do well. So it's not surprising to me. This is what I would have expected to have low scooter scores. Internet, software stocks, software. Look at all the software down here on the bottom. A couple internet. These are the areas of the market that have not performed well. But this will give you just a really quick sense of what's taking place. Then you can do this at each level. You got mid caps. You got small caps. You've got ETFs. Highest ETFs, natural gas fund right now is number 1. Invesco Dynamic Energy. Here's natural gas. Here's Global X China Energy. U.S. oil and gas. So you're starting to get the feeling that energy is pretty strong. That's where the money has gone mostly in 2022. So that was all I had for scooter reports. I just want to make sure everyone's aware. If you do use StockCharts, this is a pretty cool tool to at least get you started. The other one last thing I'll say is if you go back to large cap, you can pull this up and say over the last week, look at the changes in the scooter. So here's Dollar Tree, which over the last week has seen its scooter score drop by 63 points. Solar Edge has seen it's gone down 43. Advanced Auto down 40. This is just telling you the big changes. So this might be something that you might be interested in if you're, like to short. You might say, well, what's been going down? I want to see, I want to go with that momentum. Or the flip side is what's really been rallying. And you can see which ones have come up. And by doing a little simple math, you can see Snowflake has come up 46 points, but it's only at 50. So last week, that means it was down at 4. So that was a really horrible stock. And now all of a sudden, it's in the middle of the pack. So you might say, oh, what's that stock look like? You pull it up and wow, okay, we had a big event. Well, I know they just reported earnings. So with earnings, they beat expectations. Stock gaps up, pulls back. It's got some decent support around 180, or at least we would hope so. That was the prior high for the gap up. Lots of volume to support this move to the upside. AD line rising. So there's some good things here on the chart. But again, this all started going through using scooter reports. So you can find potential trades, things that you're interested in, just by some of the tools that you have right here at StockCharts. All right. Tips and tricks. So I thought what I would do, just to show you a couple real quick. You may be aware of these, you may not. If you're an income investor, I don't know if you've ever used the dividend feature, but here is Starbucks. And if you go down to the bottom under indicators, you can pull up dividends and it'll give you the history. So I'm going to go back, I don't know, let's go back 5 years, and you can see the history of dividends on Starbucks. I'm going to make this a little bit bigger. So here are your dividends. So looks like back in May, Starbucks was paying, I don't know, a 30-cent dividend. And then in August of 2018, they raised their dividend. And then you can see they kept it the same for a little while, raised their dividend, kept it the same. But you could go back and turn this into a long-term. Let's go down here. Let's, I don't know, let's just go back 20 years. If you want to see the history, Starbucks started paying dividends in 2010, did lower their dividend, it looks like in 2015, but otherwise has been consistently raising their dividend, looks like annually for the last 7 years. Starbucks has been going up. Apple pays a dividend, small one, but they pay a dividend. You can look down here and see what they've done with their dividends, kind of all over the place. ExxonMobil, what's their dividend? Well, it's been going up pretty steadily. I don't see any drops on this chart last 20 years. So, if you're looking for income, this is one way to check that out. Another thing, I think I showed this recently, but I get this question asked a lot. When I show my, let's just pull up Tesla, and I show my volume down here, I'm asked, how can I get average volume? Because a lot of times I'll say, if a stock breaks out on better than average volume, that's a confirming signal, and I feel more bullish about it. And so a natural question comes in, well, what do you do with volume? How do you see what's average volume when it's going up and down? How can you tell? Well, if I just show volume separate like this, it's kind of difficult to tell, right? But what I can do is turn this off, and I can go down under indicators, and there's a volume indicator. And what you can do with this volume indicator is come over here and put in an overlay. Simple moving average, 50-day. Now, I'm going to put this back up above the accumulation distribution line. So it's going to look kind of similar, except now look at the line that's in there for the 50-day moving average. So now I can look and see, well, Tesla's been selling off, but it's been selling off on light volume. When it was going up on heavier volume. To me, that's a bullish pattern. Others don't pay as much attention to volume, But I can kind of look at the chart. I don't need to see the line. But if you're uncomfortable and you're not really sure, that's how you can add that line. Last thing I'll show you is seasonality. If you come under where it says sharp chart, just go down and grab a seasonality chart. And we can do the same thing with, you're going into September. It tends to be a bad month. So you might say, well, what about NVIDIA? How does NVIDIA do in September? Well, you pull it up. This is how over the last 5 years it's done. Technically only 4 years because September for 2022 isn't here yet. So this is only looking at 2018 to 2021. So if you want to actually go 2017 to 2021, you pull this back 1 year, slide it back. Now it's 2017 to 2021. September, it's actually gone up 4 of the last 5 years. And it's averaged going up 0.7%. Another thing you can do this chart is compare it to the S&P 500. And again, drag it back one because we're not into September yet. And what it's telling me is that NVIDIA has outperformed the S&P 500 3 of the last 5 years. And it's averaged outperforming by 1.6%. And then I can take this and drag it back and go back since the start of this, what I consider the start of the secular bull market, 2013. 2/3 of the time, NVIDIA outperforms the S&P, and it does it by an average of 3.4%. So you can find some historical information on the stocks that you want. So just a little seasonality tip there. All right, earnings spotlight. Don't have a whole lot earnings, being reported right now. One that was reported last night, excuse me, was Hyco Corp. This is an interesting one because it's actually been outperforming. It broke out. So I think it looks pretty good here. I'll pull it up on a chart where we can look at relative strength. AD line's been very good. Stock broke out to a new 52-week high. That's awesome in this market. And look at it relative to the aerospace group. So I would say this was a stock that was expected to have a pretty good report, and they did. They beat 65 cents versus 60. And again, if we go back to the pre-market, stock is up almost 2% this morning, pre-market. So doing pretty well. A couple of other smaller companies reported. Prospect Capital, PSEC, they beat 21 versus 19. After the bell today, we'll get Bank of Montreal. We're going to get Baidu, Best Buy. So a couple of names there after the bell today that you can watch for. All right, last thing, the 3 you must see. I'm just going to go through really quickly 3 energy stocks. So you got FANG, which is up here trying to break out on an AD basis. I think it's trending above its 20-day. As long as it's above its 20-day, I'm fine with it. Then you've got MRO, which is Marathon Oil. Same thing. It had gone down, sideways consolidated, broke out above this double top. Now it's trending higher. PPO looks good. Again, as long as it stays above the 20-day, I'm okay here. And then ExxonMobil, which is getting closer and closer to its June high. I think ExxonMobil, look at these pullbacks. See how they're bouncing off the 20? That's the timing you want as a trader. Get it when it hits the 20. If it goes below the 20, you get out. If it bounces, you make money. Anyway, that's it for me today. Have a great day, everybody. Let's see whether or not this rally can stick, at least the pre-market rally. Anyhow, have a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.